My system.
Morning, everybody. Welcome back to the Opportunistic Trader. It is 8:30 on October 17th, Wednesday. This is Mike Aronovitz, and I'm joined by Vince Lancy. Larry is actually flying today. He's in the air right now, so he can't join us at the moment. He is flying to Chicago, where he's going to be at the FIA conference. He's also going to be meeting Phil Flynn later today and doing an interview on the floor in Chicago, and talking to some old friends up there. And so we'll get some updates from him live from Chicago a little later on. But as Larry does, we're going to go over the markets. I've been speaking with him, and I have his thoughts and things of that nature. So we'll recap. Obviously, it's been a really interesting market. Last week volatility pops. We saw a fair amount of panic. I don't want to say, we started to see some panic for the first time since February. VIX got up to 29, and then yesterday we just saw a huge rally. S&P was up about 2%, NASDAQ up 3%, Russell up 3%. So it was a really broad U.S. rally. But that last part is the key part. It was really U.S. Overnight, where there might be some catch-up, Asia was higher, but nothing big, nothing near where we were. Nikkei was up under 1%. Right here. The Nikkei was up 1.3%. But Kospi was up, and here, so other Asian markets, Kospi was up 1%, Hang Seng was up 0.1%, Shanghai, which was down heavily the night before, was only up 0.6%. So it kind of got back to the themes that we've been seeing for the entire year of U.S. outperformance. So it was, a broad rally across the board U.S. There were very few pullbacks. It was just straight up. And then after the bell, we got some mixed earning results. IBM's trading lower, Netflix trading significantly higher. But fixed income yesterday was very quiet in that equity move up. And once again today, fixed income very quiet. The U.S. 10-year yield is stuck at 3.15 here. 30-year at 332, 2 years at 287. We just had the housing starts come out, which is one of the two big economic indicators for the day, and they were very in line. Nothing big there. And Vince and I are going to get into it a little bit, the housing market in a little bit, but the housing data in line, nothing fantastic. Came in at 1.2 million versus a 1.205 estimate. Building permits a little weaker. So that's been the theme. The housing market has not been trading well, whether it be due to the higher yields or maybe some other things going on. But that just came out, and then later at 2 o'clock we have the FOMC minutes, which Vince was just talking about before on his gold fix call, where he's everybody digests and breaks down every sort of syllable and letter and what it might mean, what he's trying to say by this or that. And so, we'll keep an eye on that at 2 o'clock, because that's obviously market moving, especially when the focus of the market is in yield. So if there's some sort of hawkish surprise, that's something that the market's definitely going to pay attention to. So Vince, what's going on? What are you seeing?
Well, I think. Good morning, by the way, everyone. Good morning, Mike. I think people may be scratching their heads as to why the market rallied, and yesterday. By market, I mean the stock market. And let me shed a little light on that, at least from my perspective. It's an after the fact, it's an autopsy, but this is, I think, what happened. We mentioned in yesterday's call the tick data, which is basically capital inflows or outflows in the country. I think, and for the wrong reasons, but this is how it goes. With a hat tip to Larry on the whole buying strength because it's strong. The tick data was yesterday's driver. The report showed much more money flowing into the U.S., which, of course, spurred even more money to flow into the U.S. Go figure. The important takeaway is the tick data showed money being taken out of U.S. bonds by Asia and money being put into the U.S. by Europe. So the demand for long-term U.S. long-term assets and liquid assets reached 131 billion in August. That's the most since September 2014. The average, to give you some perspective, the average through July of this year was 49 billion. We're going to put up a post on that. My point being is that I think the tick data showed flows into the U.S., not necessarily in the bonds, net, but into the U.S. So where are they going? They're going into stocks. And I think that information came out yesterday and drove more people to put money into stocks.
Wait a second.
Um,
Did you just hear something really loud?
no,
I just heard something really loud, and I think it's Larry screaming from a plane that there's zero chance that the tick data is what moved the market up significantly yesterday.
right, exactly. Well, let me.
I think he would strongly disagree, but I'm interested to
Right.
hear more info about it.
Well, then let me just put it this way: uh, the market, not disagreeing with Larry. The tick data doesn't move anything. Data doesn't move anything. It's perception of data that moves the market. So I believe, people read the tick data. This is my story, and I'm sticking to it. I'm not going to let the facts get in the way of it. But it's true. The tick, I believe, I can't find any other dominant driver. The tick data came out. It was a lot of money flowing into the US. Again, it's people that are, taking their money out of foreign markets. And for the wrong reason, I think people said, oh, people putting money into US, I got to put money into US stocks. And so perception of data is more important than data
Well,
itself.
yeah, but a few things. One, that's been going on for months and months and months now, where the idea of really of this equity rally in the U.S. outperformance has been that people have been shunning other assets and, in a way, coming to the U.S. for safety, and that's been really what's been fueling the markets in the U.S. more so than anything, I think. And the tick data is backwards looking because it's showing what already happens.
It is,
Um,
but it just had a 2+% drop sell off. And I think this was a reason for people to buy, or an excuse for people to buy, whether it be people who had to get long or shorts who wanted to cover, worried about a trend of more inflows into the US.
Well, on that,
Whatever the reason.
I'm gonna plug. So Larry put together a free webinar on how to trade volatility, and I think part of this, and it's mentioned in there, is it's not so much one individual data point, whether it be tick data or this or that, that's driving the market. What it comes down to, when you have a 20 vol, you're going to see very large moves, and it doesn't necessarily need a specific catalyst or a specific data point. It's just going to be markets moving on air. People get put into positions at bad levels. They have to get out. People have been getting short. It's part of the higher volatility, and I don't think the move's over. I think that we're still going to see large moves. I mean, look, hey, we're down 11.5 points right now in the S&P future. 5 weeks ago, we were up or down 4 points overnight and trading in like a 6-point range. So overnight, we've already had a 20-point range. That's higher volatility, and I think that that's part of it as well.
Um, yeah, I mean, higher volatility means higher uncertainty and higher nervousness and overreactions to news, properly or improperly. So my takeaway is very simply, the market is going to be more sensitive to data because of whatever reason. We were down or volatility is higher. They're all related,
Sure.
but I'm looking at tick data now next month. And if the market moves on tick data again next month, I'm going to do like any trader would do and say, where's volatility? Did the market move on tick data next month? And when it does, yes, it's backward looking. But why didn't it move? Well, market's not nervous anymore. A sneeze will make the market move. Tick data itself may not be important, but given the fingernail biting recently, I think it doesn't take much to get the market going. And yesterday was, whatever the reason, the market went.
Yeah, absolutely. And it's interesting. So, U.S. markets are down, like I mentioned before. S&P's down 11, Nasdaq's down 43. That said, we're basically at the levels we were at 350 or so yesterday. So it's really a misleading price action. But if you take a look at Europe, which didn't participate, obviously the European markets closed at about anywhere from 11 a.m. our time to 1 p.m. And right now, so they didn't participate in that afternoon sort of rally, and the DAX is down 0.5% right now. Italian MIB is down 0.5%. So once again, it is really, really strong outperformance on a relative 2-day basis or 3-day basis of the U.S. outperforming the world once again.
Right. We had a lot higher to fall from, and Europe specifically, uh, 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 European stocks. If you look at the dollar's stronger today. It's stronger against the euro, and even more stronger for bad grammatical purposes against the British pound. So I'm not saying I give a shit, I give a damn about data or numbers. I'm saying I care what other people care about numbers as an active trader. Right now, the British pound is lower. Right now, European stocks are lower, and right now they're worried about Brexit again. So whatever the reason, the euro is a mover. Yesterday we had uh, 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 to the point. Yesterday we had a big option at the 115 spot five number in the euro versus the dollar, and the market settled above that, and now that option expired, and we're below that. So I got to think that uh, uh, to your point, we fall from higher heights. They don't rally when we rally; they sell off when we sell off, and we're just a reflection of us as an economy.
Yeah, and the pound got above 132 yesterday and was looking strong. And like you said, some Brexit. I can't even keep up with these Brexit headlines. It's just nonstop. The same people saying, "Oh, could be this, could be that." I mean, it's
Right. I
really a
agree.
huge
I think
ordeal. It's so complicated, and we'll see what happens. There's a March 2019 deadline, and they have to start getting some ducks in a row to really have anything sort to play out in those sort of right predetermined timeline of where they are right now. But you mentioned very
Brexit
well
fatigue.
yesterday that euro 115.50 option, and I think that did support the market yesterday. We were trading up as high as 116, but then I think around that 11 o'clock option expiration we were trading about 115.70, so held it above, and now we're trading below that at 115.30. FX not moving a whole lot. The pound, pound and euro are down about 0.5%, which is okay. Aussie's down 20 basis points. Dollar yen is dead flat. Dollar CAD's hovering around that 130 level, so not a whole lot of activity there. And dollar turkey's quietly has been grinding lower. We're now at 570. Remember, we were around 6.25 for a number of weeks. This 570 level is still a significant rally on the year. I mean, we're still talking about a 50% move in currency.
Yep.
Dollar MEX at 1882.
Yep.
But FX not doing a whole lot right now. Yield's really doing nothing. Yesterday, with all the activity, that was what was also interesting about yesterday's move. It was solely an equity move. Oil wasn't moving a whole lot. Yields, FX weren't moving a whole lot. Yields have been very quiet for right now. The 10 years at 315, 30 or 332. I think the minutes at 2 o'clock will be interesting to see, since the fixed income has been in the spotlight for the past few weeks. We'll see what they really had to say. The minutes really break down the behind the scenes, what they were supposed to put into the text, what they might have put, or just more color on what they were talking about in the meetings.
Right.
So that's always heavily looked at.
That's at 2 o'clock, and although the minutes may mean nothing, market participants may perceive it to mean something. I personally feel that since the Fed hiked and made little adjustment to their forecast recently, I believe the minutes are unlikely to do much more than provide more color. Investors are already confident of the December hike. That said, my opinion means nothing. It's the macro. It's the market's opinion of that. Um, uh, you know, you wanted to talk about Trump and the Fed, and I have something on people who are trying to read tea leaves on Trump and the trade war. So,
Well,
uh,
yeah. So the story of yesterday was, and once again, not being political, just reporting what's important to the markets. But President Trump said, "My biggest threat is the Fed," and I feel like this is him, trying to get the narrative off of his, of this recent equity decline, which is really nothing. We're talking about a few percent decline at this point in the U.S. markets. But with the midterm elections coming up, that's really the focus for him at this moment. We're only 2 or 3 weeks away, really right around the corner. And, I think he's trying to, if the market sells off, or even just whatever people might have read in the headlines over the past week about the market selling off, making it clear that it's not him and not his administration, that sort of thing. But
well,
to say
he
that
is a
the
great.
Fed is his
He's a great.
biggest threat is interesting.
Well, he is a great marketer, and before I make a serious point, if you observe him, and I've worked with people that worked closely with him, and as a person who ran money out of New York for 20 years, Trump's a person who knows how to take credit for winners and find a scapegoat for losers. And I don't say that in a derisive way. What I mean is, stock market's up, and Trump can take credit for that. Every president does that. But I mean, 2 days before a sell-off, Trump starts, bashing the Fed, and he's already got a scapegoat built in. That's good. But I want to say something. If you just take out the rhetoric that the president says. I want to, and we are talking about when important leaders address economic factors, they move markets. So there are many, forget Trump for a second, all right, or forget how you feel about how he puts things. There are many mainstream economists, who share the view that the US business cycle does not, the phrase is die of old age, but is instead murdered by the Fed and an overly vigorous monetary policy. Now, those are doves speaking, but, if you were to take out the flamboyance of how Trump speaks, he's really just echoing, I think, what a lot of doves say: "Don't raise rates. I'd rather have. I don't want the market to be destroyed." So that's why I think it's important to pay attention to what he says, because how the Fed reacts or doesn't react, reinforces their independence. So it's kind of interesting to me.
Yeah, absolutely. It's that's kind of rhetoric that's been going around for a little while now.
Yeah. Uh, you want to look at some markets for some, I don't know,
Well,
maybe
it's
trade.
interesting. I was actually just taking a look around at some upgrades and downgrades, and a few interesting things to even just take a note of. It's funny. I saw there's actually a downgrade of Netflix, but the price target was from like 500 to lost it. Here it is, from 494 to 464. So still well above the market, and they're basically saying that slightly light on most metrics is the Q4 guidance. But that earnings report was pretty solid. The stock is now up about 10%. It was up above 400. It's right now trading 379. It was trading above 405. So that was a beat there. But it's interesting on the upgrades and downgrades front, which I just posted in the equity room. And I'm sorry about the format. I can actually repost it in a bit. But Home Depot getting a downgrade at Credit Suisse. And that gets into the housing side of the underperformance of the housing market, which Home Depot has mostly been unaffected by it at this point. But the housing stocks, and I have that chart up on the right, really a steep decline. They had a small rebound yesterday, a few percent rebound. But the housing stocks continue to get beaten up in being a sector that underperform. IBM once again is it's down about 4% right now, and it's getting a few downgrades. They just can't seem to get on the right track. But we're getting into earnings seasons. A lot of interesting moves out there. That's
Yeah.
something to keep an eye on.
Comment I read on housing starts. There have been reports of some banks reducing their headcount in the space. So maybe that's a leading indicator for housing starts numbers. Um,
Yeah,
uh,
I think it is more than just yields. People are talking about, yeah, it's yields that is the reason for the housing. I just think housing prices have gotten pretty unaffordable. I think, the housing prices have gone up really fast since, over the past 5, 7 years, and wages haven't kept up with it.
right. Yeah, that's the next in line. If we don't get wage inflation, despite the full employment concept, then housing prices are going to have to correct if they haven't started to already. I have a couple trade signals that might be of
Yeah,
interest to
let's get
people
to it.
that are looking. Yesterday, Larry was looking at crude and WTI and noting how it wasn't strong on the S&P rally. And today, again, I'm not in it because I missed it, and it happened on the first hour. Below 71.69 is a safe short. I should have sold it when it traded 71.52, but I did not. So I think I'm biased lower today in crude below 71.69 on an hourly basis. And interestingly enough, WTI is down 80 cents. Brent is up, uh, relatively speaking. I know there's a difference in closing of the markets, but I think it's kind of interesting, to use Larry's word, that the spread is widening for the wrong reason, for whatever. On the S&P, uh, I have nothing to say signal wise, except that I would be potentially a buyer in the 2801 area and a seller in the 2823 area. But if the market spends time above those levels or below those levels on heavy volume, I would consider reversing and looking for more of an extension of a move. Um, the other thing I think that Larry looks at, and I think worth noting, is the, the correlations between the Nasdaq and the Dow and the S&P. And the Dow futures are what, down 100? Is that what you show?
I don't know the Dow futures up. I have the S&P down 10, Nasdaq down 36. But once again, it's especially with all the earnings releases 4 and 415, slightly misleading on what are. I think it's relatively flat open. I mean, I see Dow implied open is down 120 points, but I think a lot of that's IBM.
Right. People are licking their wounds today. So
Home Depot as well.
I think we had a couple trades yesterday. I think that were actually, speaking about my own, I had a signal on Facebook, which is not something I normally trade in, but I think the equity guys need a little bit of love here because my goodness, what a nice move yesterday. If you have an hourly chart of Facebook, we got a signal yesterday um, to buy at about 9:30 a.m. and with a target of 158 and a quarter. And I didn't hold on to it till then, but we had some nice moves. And I know that Tom put on some positions. I want to know how those turned out today. I'm going to check in the chat on with that. But I don't know. I wouldn't be selling dips in stocks today, and I wouldn't be buying rallies. But I do. I did speak with a macro fund manager last night. I said, "How'd you do in the bounce?" And he said to me, "I lost money in the sell-off, and I lost money in the rally." And we went through the reasons why, and uh, the it's just really bad for active managers right now. They can't keep pace with these passive things that really don't pay attention to the fundamentals and or the news. So I think short-term and active trading are the way to go, and uh, keeping your powder dry and trading daily is probably the way to go. I'm looking at Facebook, Apple, and Amazon today. I have levels to possibly fade those moves, and the banking sector, which has been interesting with all the earnings coming out, as you said. But other than that, I'll wait till 2 o'clock for any sort of a impulsive move.
I'm taking a look right now at my friend from Deutsche Bank, Dan Burgett, puts out a morning note, and he says apparently it's National Mulligan Day, and he says let's
That's funny.
take the UK. I wonder if both sides of the vote in 2016 are wishing for a mulligan, as it seems we are set to discuss this forever. And
Exactly.
I do wonder, and I think I might have asked Alan this. I don't think I did. Yeah, I guess I didn't. But I'm wondering, these people on both sides in 2016, if they knew where we were today, are they satisfied with what's going on? The people that voted for Brexit, against Brexit, I wonder what they're thinking now. The update from the passionate sides at the time on both sides, because it's been a headache, and it doesn't seem like it's anywhere near done.
No, it's a never-ending divorce. In fact, I would be interested in what Alan has to say on that. But if uh, we put up a post yesterday on Brexit because it was like 1,000 words or less. Told you where we were. I told you where we're going, and that was from someone that I follow, Mark Chandler. And if you want to read Brexit, one article on Brexit, and then move on for the next month, I would go back to our site and read. The title of it was, I don't have any sites in front of me right now, but the title of it was Brexit Frequently Asked Questions, Straight Without the Noise. And uh, I think if you read that, other than conversations with Alan Hill, we can be done with it. And yes, they want a mulligan. Everyone does.
So, the other data points that we were talking about we have option expiration in crude oil at 2:30 today, and so
Right.
right now we're trading 71.34. And what's interesting with today's expiration, we actually do have the DOE report at 10:30, and so right now the 71.50 straddle is trading about 75 cents right now, and we're right now 71.34. So not given the recent volatility, really not a whole lot in this. Especially on a DOE day where we get some volatility. Typically, we get $1, if not more. So not a whole lot on that, but we'll definitely keep an eye on that, especially after the report is released. We're going to be speaking today, Ed Meir at 11 o'clock. He is from Commodity Research Group, talks about metals and macro. He was actually just at a big metals conference in London where they get a lot of information. A lot of guys well tied into China, which is obviously a big user of metals. What they're thinking, what they're doing. So we'll get that update from him. And we're also going to be speaking to Tracy Shukart at 12 o'clock. And she'll be giving us the update. She'll be taking a look
Just
at
to
technical
interject on
analysis.
with Tracy, she just put a chart up showing the 240-minute channel. So in the energy commodity chat. I think if you're a technical active trader and you pay or you pay attention to oil, I would tune in for the technical stuff with Tracy and look at the chart she put up just right now, Mike, if you can.
Yeah, absolutely. Yeah, she's very good with the technical charts and has a lot of different ways of looking at the markets and breaking things down. And right now oil's been a huge mover. This is, for the year, we're still heavily outperforming. We got up to about $77. We're trading $71. That said, we're still having a great year in oil. Commodity markets as a whole aren't having as great a year. It's really been Brent and crude, and then nat gas as of late. Nat gas right now we're trading 326, which is at the, I think the high is like 335 we've gotten up to, but that's still, very interesting there. But nat gas, crude, Brent, those are outperforming for the year, but the other commodities are not trading well. Gold showing a little bit of life here. What are your thoughts on gold? Give me some levels here. We're 1230. We've been for so long between 1190 and 1215. We finally broke out of that. Now we're holding a few days. Is this something that if we continue to trade with support at this 1230 level that you'd look to get long, or is this something you're more thinking about fading?
Last couple of days have been kind of cool because we've had two trades to do, within a $3 range, which is rare in gold. You usually get your one move a day, and if you flip the coin and were right, you made money. But the last couple of days we've had some two trades, the bull scenario and the bear scenario. Today I only have one level that I'm looking at, and that is 1227. Below that, I would be leaning towards short. I have a signal potentially pending in 2 hours to get short gold if it breaks below 1227. I'd like to note, sorry, I'm saying the word Brexit again. It's almost a 4-letter word now, but gold was down last night and rallied this morning, even while the dollar strengthened against the British pound and the euro. In history, when the dollar and gold rally for short-term moves like that, gold is usually a sale. So my level is below 1227. I'm considering getting short, and well above the market, but possible the way things have been going above 1237. I'm considering getting long. So conversely, anybody who's listening to this and who's a regression to the mean trader, you'd be buying above 1227 and selling below 1237. That's it. Gold's going to do what it does, and we'll take what we can when we can get it from gold. Oil's more interesting to me, as are individual stocks today. Sorry to say, from my first love, precious metal.
Absolutely. And I'm just looking at the earnings calendar as well. After market, it looks like we have quieter day, as a matter of fact. It's not any of the really big names. I think tomorrow, looking ahead, we have American Express after the bell. I guess it really picks up next week. We had a few big names yesterday with Netflix and IBM. I'm just looking at it. There aren't that many. AA after the close today is the big ones. I'm going to post them in the chat, but nothing too earth-shattering from that side.
Take this as you want. I'm sorry, Mike, but this is just, I'm just looking at this. The signal we had to buy yesterday in Facebook, and if you're trading any FANG, they all kind of moved the same way yesterday. I now have a regression trade. I'm considering getting short below 157.40 if it opens there, with a stop out at 159 and a quarter. So I'm looking at the short side for possibly retracement on FANG stocks, focusing on Facebook today. So it seems like I'm Larry today. I'm bearish with everything. Let's let's see what happens. It's a shame he's well. I'm sure he's doing something in the market, but
Oh, he is. He's on the on the plane, and he's trading around a little bit. He's going to give us some updates when he lands, and give us thoughts. He's tracking the markets, on the planes. There's not a whole lot else to do, but he's going to have an interesting day in Chicago. A lot going on there. But I think the main focus is, the volatility in the equity market. But most other markets yesterday didn't move. I think the Fed minutes will be interesting. We'll see that at 2 o'clock. See how equities react to individual sectors. We'll keep an eye on that. And, we have a few good webinars coming up later today. Any other thoughts, Vince?
no, no other original ideas. Just I think the people who are constantly trying to get inside the brain of a trader, of a gut trader, term you used before, like Larry, who's looking at a lot of moving parts. I think the webinar you put together with him is you finally cornered him and got some good insights. A lot of trading when you're working with or for someone is trying to read their mind, and I think I'd recommend that to anyone who's trying to figure out a consistent rationale in why traders do what they do. Specifically, a gut trader like Larry. So I'm just plugging the webinar. People should listen. People should go see that. That's pretty good.
Yeah, I just
And
tweeted it out, the link. It's free for everybody to check out, and I just tweeted the link. So, and also put it in the chat as well.
all right, cool.
But
So see you in the chat
yeah,
room.
you get some Larry on that webinar. Yeah, we'll see everybody in the chat room. We got the S&P futures down 11, the Nasdaq down 40. VIX right now up about 3% at 1828, but a far cry from where we were yesterday. DAX, European markets trading a bit lower on the same old mantra, Brexit uncertainty and lack of progress there. A lot of political
Any
uncertainty
excuse to
there
sell
as well.
European stocks. Any excuse to sell European stocks. I think is what we've been seeing for the last year, right?
Right. So, all right. Well, thanks, Vince Lancy. Thanks for joining us at doing the Gold Fix and also the AM Roadmap. And we'll be back in touch with everything. We'll see everybody in the chat room. If you have any questions, let us know. But we have Ed Meir at 11. We have Tracy Shukart at 12. And Larry will be jumping on later as well. Speak to everybody in a little bit.
Cool.